Panic is setting in for a lot of people right now. As I speak, people are trying to get their money out of the bank because the banks are collapsing, starting with this particular bank. Let's get into it. Shares of Goldman Sachs and Bank of America were hit hard. I repeat, shares of Goldman Sachs and Bank of America were hit hard. Silicon Valley Bank shut down by regulators in a stunning collapse today, Friday, March 10th, 2023. Other banks are set to follow. At least 3 other banks are set to shut down in the next 60 days. Not much is being said, but a little is. So watch out for the following 3 banks to see what happens to them. Silvergate, Credit Suisse, and Signature Bank of New York. Guys, it is happening. It is happening, and it's happening really fast and almost without warning for some people who aren't paying attention. The article states, the sudden collapse of a little-known California-based tech lender fueled market chaos on Friday and sparked fears of a wider contagion that some experts worry could upend the U.S. banking sector. Silicon Valley Bank, also known as SVB, is a 40-year-old lender to startups and venture capitalists, became the second biggest bank casualty in U.S. history, as it was abruptly shut down on Friday by the California Department of Financial Protection and Innovation, which placed its remaining assets under the FDIC control. It is also saying that SVB's finances went south at warp speed after it disclosed a $1.8 billion loss on its bond holdings this week. CEO Greg Becker had urged investors on a Thursday conference call to stay calm and not panic. But guys, guess what happened? They panicked. So it says jittery clients were already scrambling to yank large balances in excess of the FDIC's $250,000 insurance cap, because anything over that, the bank will not insure that, you guys. So the FDIC is saying that depositors will have full access to their insured deposits no later than Monday morning. The feds added that SVB's official checks will continue to clear despite the closures, but people are not buying it and they are snatching their money out of the bank right now. I have a picture. I'm going to put it in here. It's showing the bank. It's showing the bank actually locked up, people standing outside, I guess trying to get in. It is pandemonium right now. This article is also reading, lots of people I know lost their money. One frantic tech entrepreneur told the Post in a Friday text message, friends, startup had $20 million in the bank and couldn't get it out. That is serious. Uninsured depositors will receive a receivership certificate for the remaining amount of their uninsured funds. That doesn't guarantee them getting those funds. Anything over $250,000, they may not get. Billionaire Peter Thiel's Founders Fund and other tech luminaries had urged startups to pull their cash, pull it out, or risk losing it entirely ahead of the bank's failure, which came amid a major slowdown in the initial public offering market this year. The crisis prompted ominous warnings from other market heavyweights, such as eccentric investor Michael Burry of The Big Short fame, who tweeted, "It is possible today we found our Enron." Hedge fund billionaire Bill Ackman called for a government bailout of the banks. Does any of this sound familiar to you? 2007, 2008? That was a hard time for me because that was almost the end of my business. That's when it started. And I ended up having to shut down in 2011 after that. It's also saying that SVB's depositors are tech executives rather than mom and pop investors. The chaos unleashed by the bank's downfall could spread to other institutions and spell trouble for a broader economy. Investors are concerned on where they should be putting their money in. And it is not good for the smaller banks when these questions are getting asked by customers. Silicon Valley Bank's downfall marked the largest bank failure since the Great Recession and the second largest of all time in terms of assets, trailing only the doomed Washington Mutual. It is the first FDIC-insured institution to crumble since Alameda State Bank in 2020. As of the end of the year, SVB had approximately $209 billion in total assets and roughly $175.4 billion in total deposits. And that's according to the agency. SVB ranked as the 16th largest bank in the U.S. Earlier this week, SVB disclosed a $1.8 billion loss after conducting a $21 billion fire sale of its bond assets. Trading of SVB financial shares remained halted on Friday morning following a CNBC report that the embattled firm was attempting to sell itself. The bank tapped advisors to assist with a potential sale after failing to raise the capital. Goldman Sachs worked with SVB on a deal to sell shares at $95, but the arrangement had fallen apart by Friday as more investors pulled out their funds. SVB has not responded to multiple questions or requests. The bank's rapid descent into insolvency sparked a sharp sell-off in U.S. stocks, with the nation's four largest banks losing a combined $52 billion in market capitalization. Shares of Goldman Sachs and Bank of America were hit hard. I repeat, shares of Goldman Sachs and Bank of America were hit hard. A chief marketing strategist says investors are fearing a repeat of 2008 style sort of dynamics, and this sell-off in the banking sector has raised fears of systemic risk. Silicon Valley Bank website noted that it banks nearly half of all U.S. venture bank startups and 44% of the U.S. venture bank technology and healthcare companies that went public in 2022 and SVB clients. In an email to clients that was reviewed by the post-Silicon Valley venture firm RRE, admitted, while we work to understand when and how normal banking operations may resume, we are concerned about our companies' short-term access to capital. So major companies may not have access to capital, which means a lot of things will close down if they don't have that funding. Notable firms listed as SVB customers include Pinterest, ZipRecruiter, and Shopify. It's noted that in New York, police were reportedly called to the local SVB branch on Friday morning after depositors swarmed the building in a bid to withdraw their money. One Boston-based tech CEO, Farmbox RX, founder Ashley Tyner, told the Post that she had been able to look into her SVB account where she had at least $10 million in deposits, describing the saga as the worst 18 hours of my life. So although they don't want people to panic too late, they already have. So let me know what you think down in the comments, you guys. This is going to be wide-reaching. This is going to be devastating for a lot of people. Here's a picture of people lined up outside of a bank. They were doing a bank run. More people trying to get their money out of ATM machines. More people on the phone. The panic has set in.